This morning on BRN, China rolls out $112 billion in funding to bolster its stock market. Joining me now to discuss this, Jane King is a financial journalist joining us from the NASDAQ. Jane, always great to see you. Always excited for your great analysis.
Great to be back, Jeffrey.
All right, we're going to talk China. And recently they rolled out some additional funding to kind of bolster their stock market. But first, what's going on in China?
Well, it's funny because I watch the Chinese market a lot because somebody told me in 2003, like this is going to be the next big thing. And so I've been watching it for a long time. Huge growth until about 2010, maybe right around the Olympics, a little bit after the Olympics. And then really things started to slow down. And then of course COVID came and they have never really recovered from that. So, and for a while they had a lot of property overbuilding all kinds of cities that nobody was living in, condos and things like that. So their property sector really got hit first and hard. And I think the government had to take over some of those companies. But and they've done a lot of nothing for the past couple of years, but just in the past month or so, the government has started to inject some big stimulus, like meaningful stimulus. And the market was up like 25%. Now it's settled down a little bit. It's up more like 9, 10% now over the past couple of months. But after doing nothing, it's been pretty impressive. And David Tepper, he's a big hedge fund, I think he's a billionaire, says, I'm buying as much China as I can find. So there's some people that are really bullish on China. But what they basically did, most recent stimulus was 112 billion in low interest loans that the financial institutions can give to people to buy stocks to stabilize the stock market. So they're really trying to, I think, boost their stock market and just boost confidence and trying to get their economy, on better traction.
Jane, I recall those, I think it was a 60 Minutes interview when they went and looked at some of those cities and no one lives there. It's striking. It's almost like something out of like Night of the Living Dead or something like
It
that
is. I mean,
without
you
the
think about
zombies.
all these homes and nobody's there and they all look exactly alike. And oh, yeah, it's a little creepy.
It is a little right out of Hollywood. So Jane, when I saw this, first of all, it kind of caught me off guard because I know China to be, I think, the number two economy in the world. At least it was several years ago.
I believe still is.
And I thought, based on all the goods that they produce, that things were going real well in China. But I guess my layperson's point of view is incorrect.
Well, they just got overextended in terms of credit and growth. And, people had so many expectations. And then the government just kind of was like, well, we're going to just, for a communist government, they just kind of said, we're going to let the free market take over.
Yeah, well, that's where they get the point. They get to pick and choose, I guess, what free market principles they want to follow.
Yeah.
Jane, is this kind of analogous? We were talking offline, and I asked you this, and so you kind of know what's coming. But is this analogous in a way to the quantitative easing and some of the other stimulus that are federal? Because it's the People's Bank of China that actually takes this action. It's their version of the Fed, I guess, but
Right.
they use the yen or the yuan, right? I mean, that's their currency.
Mhm.
But is this analogous to QE and what we had, 2008, that stimulus that we saw?
No, I don't. I think so. I mean, they didn't have a crisis. It was like this slow rolling crisis. But yeah, I mean, there's all kinds of tools in these central banks toolbox to be able to boost the economy. We bought a lot of bonds. They're giving low interest loans. I mean, that's another option. So, and they had now typically when you see spending like this, you might think, oh, it's going to get inflationary. They've actually had deflation. So they could use a little inflation. So we'll see. I mean, what has to happen in these situations is this has to be the spark that gets the private sector going, not continuous government help. So that is the next question. We'll see if that happens.
So how does this tie back to the U.S. stock market? I need to understand this basically. So obviously the U.S. participates in a global market. We have trade partners like China, Mexico, and et cetera. How does this, and you mentioned David Tepper, who, by the way, maybe a billionaire, but his football team management needs a little work. But we can have him on the show to talk about that. But in all seriousness, how does this play, it's true, in the U.S. stock market?
Well, I remember a time when I would come to work and I'd check like the Chinese economic reports because they come out about midnight New York time. That hasn't happened in a few years because they're not having as much impact, but they still are. I mean, when you saw the Chinese market rally in September, we did see the US market, that it's like kind of, just lifts all these boats. And by the way, if China's economy does start to get some traction, oil should respond positively to that as well, because that will increase demand for oil. So, and oil's been kind of reacting more to the Middle East, but that's another thing to keep an eye on.
Just so I understand, so the oil demand will go up, which will raise barrels of oil. I think what's the price down? There's like 71, somewhere between 71 and 80 dollars. That's kind of been spiking a little bit because of everything that's going on in the Middle East. But if that demand increases, now you're going to see barrels of oil go up, which means that there's an increase in demand.
Right, because if China's economy really starts growing, I mean, how many 1/2 billion people there? I mean, they're going to be driving more and flying more, and they're going to need petroleum for manufacturing and to build plastics and things like that. So that will create demand for oil and drive the price of oil up.
And lastly, I want to ask you about the dollar because the U.S. dollar is the currency, reserve currency of the world. It's traded. So how would this translate to the power of the dollar? Obviously, or not, maybe not obviously to the audience, but I don't think that the yuan, I think that's how you pronounce it, doesn't actually trade at a market rate. They kind of artificially keep it, which doesn't seem very fair when you're in a trade. But I don't negotiate trade policy for the U.S.
I know.
But how does this, in all seriousness, how does this affect the power of the dollar, which has seemed to be getting stronger against other currencies?
Well, for a while there, it was like the yuan was kind of challenging the dollar, at least in some parts of the world, like Soviet Union and maybe some, kind of unfriendly countries to the US. But then with China's weakness, the dollar started getting more power. But I actually think what will have more impact is how this election turns out and then what
Mm.
happens in terms of government spending. And if the government would rein in spending and keep those interest rates, reasonable, that should keep the dollar strong. So I think we'll watch the election, see how that'll impact.
Yeah, it seems to impact a lot of things. And you mentioned the last thing I want to close out on is the Fed. How does the Fed take anything away when they're making interest rate decisions? Do they and I know you're very tight with Jerome Powell and the rest of the board of governors there, tongue in cheek, or you may be. But how do they process what's going on in the other global environments? Does that factor in anything they do, or is it solely just based on the U.S. economy and kind of where it stands based on inflation, jobs, et cetera?
I think no doubt they keep an eye on what's going on overseas and what the other central banks are doing, but everything is done through the lens of the US monetary supply and interest rates. So it's like, how does this affect US monetary? How does this affect US interest rates? So everything's global, but they got it. What they control is the US and the money supply, and that's what they ultimately need to focus on.
Yeah, very, very interesting. Again, you can't hide in today's economy. I mean,
No.
everything is so interconnected, and
Well, and
the
so many
speed of
US companies do business in China.
yeah, the speed. I was going to say the speed of transactions now. It's digital. It used to be you had to fly and do business. Now you can just Zoom like we are actually today. Jane, we're going to have to leave it there. Always great to see you. Excellent analysis as always, and we look forward to having you back on the program again next week.
Okay, see you then.
Don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website. And we're back again tomorrow for another edition of BRN. We'll have a very special guest. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.